Now, let's just start by looking at the prospects for the silver price. You can go to the Silver Institute and see the historical supply and demand table. And if you look at the top, you'll see that the mine production has been falling annually since 2016. Well, the production will be up 2% this year, but in 2016, production or mine production was 900 million ounces. And now, in this year, it's forecast to be 835 million ounces, a drop of 65 million ounces. The reason that the production is not increasing despite the higher silver price is that a lot of the silver mined in the world is mined as a byproduct of another metal, such as gold or such as copper. So the demand for silver doesn't, the supply of silver doesn't really change because it depends on how much is brought out of the ground as a byproduct of the other metal.
Silver is once again gaining attention in the most recent financial news, as it has reached levels that have not been observed in nearly 12 years. This has reignited discussions regarding its future role in global markets. This surge is particularly noteworthy due to the fact that silver is no longer perceived solely as a precious metal. It is now acknowledged as a critical raw material in a world that is swiftly industrializing and electrifying, as well as a source of wealth during periods of uncertainty. The demand for silver is increasing at a rate that is significantly greater than the supply of new products, ranging from advanced electronics to solar panels and electric vehicles. Simultaneously, investors who are concerned about rising debt burdens and a deteriorating trust in fiat currencies are methodically increasing their exposure to physical metals. Clive Thompson has emphasized that these developments are not merely cyclical. They indicate a more profound transformation. According to him, the current trajectory of silver is indicative of years of underinvestment in mining and refining, which has resulted in production failing to maintain pace with consumption. Simultaneously, silver's distinctive status as both a monetary metal and an industrial engine places it at the intersection of two potent forces. Investors who disregard silver as gold's inferior sibling may be neglecting the very factors that could propel silver to achieve substantial gains. Silver is not only emulating the secure haven appeal of gold, as Thompson emphasizes, but it is also assuming a life of its own. Its industrial significance guarantees demand, even during periods of diminished investment. In the future of silver prices seems to be more closely linked to global megatrends. The growing unease with fiat currency debasement, the rapid technological innovation, and the acceleration of renewable energy projects all suggest that demand is becoming stronger and more sustained. History has demonstrated that when silver enters these phases of tightening supply against rising demand, price movements are frequently abrupt and severe, catching many by surprise. Analysts have already begun to speculate about the possibility of silver retesting its previous highs, or even entering previously unimaginable territory. In such a scenario, silver would no longer be perceived as a secondary asset, but rather as a fundamental component of industrial advancement and wealth preservation. We now present the excerpts from the interview with Clive Thompson. Please subscribe to our channel and activate the chime icon to receive timely updates before we proceed with our discussion. I appreciate your assistance and hope you enjoy the video.
The reason for this is that many companies are mining their gold in a politically unstable jurisdiction, or they might have a very thin margin of their selling price above the cost of mining the gold, so they're very vulnerable to a fall in the price of silver or gold. And when I use the word gold, take that to include silver, because we're talking about silver miners, but most silver miners are in fact also gold miners. And you'll see when I get to the list that many of the gold miners, which look like gold miners, are classified as silver miners because they also mine silver. Now, let's just start by looking at the prospects for the silver price. You can go to the Silver Institute and see the historical supply and demand table. And if you look at the top, you'll see that the mine production has been falling annually since 2016. Well, the production will be up 2% this year, but in 2016, production or mine production was 900 million ounces. And now, in this year, it's forecast to be 835 million ounces, a drop of 65 million ounces. The reason that the production is not increasing despite the higher silver price is that a lot of the silver mined in the world is mined as a byproduct of another metal, such as gold or such as copper. So the demand for silver doesn't, the supply of silver doesn't really change because it depends on how much is brought out of the ground as a byproduct of the other metal. Although we've got falling supply, we have rising demand. Demand over the last decade has risen from 993 million ounces to 1,148 million ounces. That's a rise of about 150 something million ounces. So whilst supply has gone down by 65 million ounces, demand has gone up by about 150 million ounces. So we passed the point of supply being less than demand a couple of years ago, in 2021, 2022, and the gap is just growing bigger. Now, according to the Silver Institute, part of the demand comes from the purchase of silver coins and bars for investment purposes. They reckon that 200 million ounces will go in that direction this year. Just to put that in perspective, that's about 1 ounce coin, 1 ounce of silver for every 45 people. So do you have your fair share? Probably if you're watching this, you have more than your fair share because I expect you bought more than 1 ounce. Another reason why the silver price is likely to push higher is the announcement by the Department of the Interior, the DOI, that they have entered silver into the draft list of critical minerals for the first time ever. So why is silver on the list? It's because it's a strategic metal and very much needed by the American electronics and defense industries. And if there was a disruption in supply, let's say from Mexico, which is the biggest supplier of silver to the United States, it would have an impact on the GDP of the United States, even if a disruption in supply is low. They say there's a 4% probability of a disruption in supply from Mexico. What does that mean? It could mean that there's civil unrest in Mexico. It could mean that Mexico decides to have some sort of retaliation against the United States for tariff reasons or some other thing. Or there could be some other event which makes the transportation of silver from the mines to the American border complicated or difficult. So what does it mean if silver has become a strategic mineral? It basically means that the USA has to stockpile it for emergencies. So they're not going to be buying tomorrow. At the moment, the report is just a draft report, and there's another 30 days of consultation on it. So that consultation period expires on the 25th of September. And assuming there's no change in the decision, then still silver will be a strategic metal and the USA will have to start stockpiling it. How much would they stockpile? Well, we don't know that, but we can say that at one point they held 5.9 billion ounces of silver, and I see in 1958 they had 2.1 billion ounces of silver. To put that in perspective, that's well over 2 years mined supply. So they couldn't even buy a tiny fraction of what they used to hold because in fact, all of the silver coming out of the mines is used by the electronics industry. So if they didn't make any attempt to buy any silver, it would certainly push the price up a lot. But we don't know if or when they're going to start doing that, but I think they will have to once silver enters onto the list officially on the 25th of September, probably.
Clive Thompson is of the opinion that the metal's underlying momentum is too strong to deny and could propel it back toward its 2011 record highs, despite the fact that it has struggled to maintain a steady price above $40 an ounce. He emphasizes that silver is distinctive in that it serves as both a critical industrial component and a store of value during uncertain periods. On the one hand, the demand for silver and solar technology is experiencing a substantial increase as a result of the global green energy transition, with the photovoltaic sector alone anticipating a record-breaking demand. Conversely, investors are increasingly considering silver as a safe haven amid increasing inflation pressures, geopolitical tensions, and a decline in confidence in paper assets. Thompson contends that these two potent forces are merging at a time when supply is struggling to keep up, which could potentially trigger an explosive upward movement. Simultaneously, Thompson underscores that silver's performance is contingent upon market psychology, as well as fundamentals. Investors who had previously disregarded the metal are now acknowledging its intrinsic value, particularly in light of its recent outperformance of gold. He also observes that technical indicators, such as the gold-to-silver ratio, are still historically elevated, which provides ample opportunity for silver to catch up. Thompson anticipates that prices could experience a significant increase beyond their current levels, potentially reaching $50 or higher, should the ratio return to its natural state. In his opinion, the recent increase in silver prices is not merely a temporary surge. It is indicative of a structural shift in the way the metal is regarded as a financial anchor in an increasingly unstable world and as a generator of future technologies.
Now, just remember, none of the stocks that I talk about today are recommendations. This is not meant to be a recommendation for anybody. I'm not your financial advisor. I know nothing about you. I don't know about your family, your age, your job, your income, or your other assets. I don't know your personal risk tolerance, so I can't advise you, and do not take anything in this video as investment advice. But what you can do is look at the shares I'm talking about and go and discuss them with your financial advisor, or if you're capable of doing it, do your own research. And I'm going to talk a little bit about how I did my research, so if you want to do the same thing on your own, you'll be able to do so. But no obligation, because I'm doing the work for you, and I'll be naming the stocks as well. So let's start by looking at the list of companies in detail. There are 38 companies I chose to put on the list for further examination. And they range in size from the very large, 44 billion US dollars. That is large, at least for the mining sector it's large, all the way down to $50 million. That's tiny for any sector. And so I broadly covered all the companies I could in that range. There were one or two which were located in strange places which we can't trade the shares, and it's harder to get the information, so I had to eliminate them. But broadly speaking, I've covered most of the market. Now, there are tens, if not hundreds, of companies which are smaller than 50 million, but as far as I can see, they are mostly prospecting companies, and therefore they're not silver mining companies. They're looking for the silver. And you know what they say about a prospecting company? It's basically a few holes in the ground with a liar sitting on the top. So even if I was to study these companies, I wouldn't be able to tell you which ones are going to be the next 100 baggers. Certainly one or two of them might well be. They might find the gold, and they might get the money somehow to dig it up. But most of them are run by one or two or three people. I found some which are run by husband and wife, and they're looking for the silver. Will they find it? Who knows? But while they're looking, they're living off someone else's money, one of the investors' money, no doubt. So how did I get this list of companies, this list of 38 companies to study further? I went to the Global X Silver Miners ETF and looked at all the stocks which are in that ETF, which is supposed to cover all the large mining stocks, silver mining stocks in America. And I used that as my starting point. Now, I noticed that a lot of the companies have the word gold in their name, and a lot of the companies, even if they don't have the word gold in the name, also mine gold. So when you hear me use the word gold or silver, I'm using it interchangeably to mean them both. So let's assume that many of the companies I'm going to talk about, and it's just a fact, are actually gold miners as well, which is why I have to often talk about the gold price too. But technically they're all classed as silver miners because they mine some silver. Now, what sort of silver miners do I like? I like silver miners who are already mining the silver and they're selling it, or they're just about to start selling. Ideally, I'd like them to be selling it at a higher price than it cost them to dig it up. In other words, in simple English, these are likely to be profitable mining companies. At least if they're not profitable now, they're likely to be profitable in the very near future, because they're already digging up the silver, they're selling it, and they only have to increase their production next year and they'll be making a profit. So that's two things: digging it up, selling it, and making a profit. Third, that's three things, I suppose. Next thing I'm going to call it the third thing for simplicity here. I want companies who are likely to dig up more silver and or gold than they did last year. So I'm looking for a regular increase in production. So that means that even if the silver and gold price stand still, their profits should go up due to the higher levels of production. And lastly, I want a company which is dirt cheap. And one of the ways to measure that is the price-earnings ratio. I know it's not the only way to measure, because people will write to me and say, oh, I measure like this or like that or the other way, or better ways. And there are better ways. But simply speaking, I want to buy companies with a low price-earnings ratio, which indicates that they're very cheap and have all those other qualities in the same company. Unfortunately, there's about as much chance of me finding a company with all of those qualities as I have of getting Miss Switzerland to go on a date with me. In other words, no chance at all. But here's the good news. I can find some companies. I thought you probably think I was going to say I can find a girl who's young or ugly. But no, I wasn't going to say that. I was going to say I can find some companies which have got some of these qualities. So I'm going to have to make some compromises. And if they've got two or three of the qualities, they're still worth looking at, and perhaps they'll make it to my most favoured list. Now, here's the list of silver mining companies sorted by market cap, with the largest companies at the top and the smallest companies at the bottom. So for each of those companies, I wanted some crucial information. And I tried to get it from artificial intelligence. In fact, I tried 8 different AI tools to get the information I'm going to tell you about in a minute. And every one of these AI tools gave me different information. It was all over the place. It was hit and miss. And you didn't know which one to trust. And you couldn't trust any one of them, because individually they were all too hit and miss in the data they gave me. So the best result, the hard work I had to do, was go to each company's website and try and find out the missing information that I wanted myself. And that's quite hard work, and that's why it's taken me such a long time to produce this video. I've been working on it for weeks, if not months, in terms of doing the research, though most of it has been in the last week or two. So the information I wanted, for each company, I wanted to know the following. How much gold and silver did they mine last year? How much did it cost to mine it? And that figure I want is the AISC, or what's known as the all-in sustaining cost, which is usually given as dollars per ounce of gold or dollars per ounce of silver. Next, I want to know how much gold and silver they're likely to mine next year, and the year after that, and the year after that. That's 2027. And I'd like to know how much it's going to cost them to dig that out of the ground. In addition, I want to know how much other costs they've got, because other costs could be things like prospecting for new gold, marketing, overheads, and taxes, of course.
Alert from software update.
So I'm looking for, let's turn that sound off there. I'm looking for companies which have a very good prospect of increasing their gold production, and that have got, also I'm looking for companies which have got lots of gold left in the ground. So I'm looking at the reserves, and I want to know how much they sell it for each year. Now
The future prognosis for silver is improving as a result of the convergence of financial uncertainty and industrial innovation, which has resulted in one of the most compelling market setups in recent years. Given the metal's distinctive status as a traditional safe haven asset against inflation and currency instability, as well as a critical component in renewable energy technologies like solar panels, electric vehicles, and advanced electronics, it generates a dual demand that is uncommon among other commodities. Simultaneously, silver producers are confronted with structural supply challenges, including declining ore grades and increasing production costs, which restrict their capacity to promptly address the increase in demand. This implies that a substantial increase in investor or industrial interest could result in a sharp upward repricing of silver itself, while concurrently enhancing the profitability and valuation of mining companies. positioning the entire sector for a potential outburst that could redefine the way in which silver is perceived in the global financial system. How do you foresee the price trends of gold and silver developing in the near future? Please express your opinions in the comment section below. If you find this video to be informative, please consider supporting us and activating notifications to remain informed about our most recent videos. I will see you in the subsequent video. I appreciate your attention.